It should come at no surprise that having a consistent way to enter trades that gives you a positive expectancy over time is going to be a pivotal part of you becoming a profitable trader. If you are missing this skill, then it is quite literally impossible for you to ever make money as a trader. Whereas on the other side of that, if you can master entries and master a consistent way to get into trades that provides you with a positive expectancy, then that will be a great first step to you becoming a profitable trader. So in this video, what I'm going to do is share with you one of the most profitable entries that I personally use. And I'm going to break this down all the way to each and every condition I look for, along with the actual reason that I press the buy or sell button. Along with that, I'll share with you a few trades that I'm looking at going into next week and give you a full breakdown of the charts that I'm paying attention to. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new. And we'll be right back after the intro and disclaimer. Before we dive into the charts and take a look at this actual entry, first, I want to go over the top 3 entry mistakes that I see beginner and struggling traders make. Number 1 is that beginner or struggling traders, most of the time this is beginners, tend to trade not even based on a specific entry reason, but based on fear or greed. Let me give you an example of what I'm talking about. So a beginner trader may see something like the market doing this and then decide, oh shit, the market's going up. I need to buy. And they will buy based on nothing more than greed because they want to make money, or fear, FOMO, fear of missing another move to the high side. And what happens more often than not is prices then begin to drop and that trader will end up losing a lot of money. Now, of course, the other side of that is that traders could be doing this and then buying right here. And sometimes, yes, price will continue higher and they'll feel like a genius. But the truth is that both of these are the wrong way to trade, because both of these traders, the one that made money and the one that lost money, both of them were trading based on fear or greed and not based on a consistent pattern, a consistent way of trading that gives them an edge over time. So instead, what we do as professional traders is we may trade right here based on something called a breakout. But before we even do that, we're going to backtest breakouts with these exact rules that we've made up. We haven't made any up right now, but what I'm saying is you make up rules for a strategy and then you take and backtest those rules in historic data. Now, what if you see that trading breakouts right above a previous level of resistance gives you about a 60% accuracy over the latest 100 trades, let's say, and on average, you could get a 1.5 to 1 reward to risk ratio. Well, this is the recipe for a profitable entry that you can now utilize in your trading. So now, instead of trading based on fear and greed, you're trading based on a proven entry that you can use over and over and be consistent with. And throughout time, if you do this, this is what creates profits in a trading career. So mistake number 1 that I see all too often is beginner and struggling traders trading based on greed or fear. Mistake number 2 is that I see a lot of traders, including myself when I first started trading, I honestly thought that there was going to be an entry reason I would find that would make me 100% accurate. I thought there was just a candlestick I didn't know, or maybe there was just a chart pattern that I had not heard of yet. And if I learned that candlestick pattern or learned that chart pattern, that I would utilize it in markets and be able to win 100% of my trades. And that could not be further from the truth. There is no secret entry, no candlestick pattern, no chart pattern, no secret indicator that's going to cause you to win 80 to 100% of your trades. What we do, instead of just looking for that secret candlestick pattern or that secret chart pattern, is we combine a specific entry, like candlestick patterns and chart patterns, with other technical conditions that together equal a strategy, and this strategy is what makes us money over time. And finally, number 3 is not having specific rules for the reason you press the buy or sell button. What I mean by that is you may have a lot of different conditions you look for inside of a strategy. You look for the RSI oversold. You look for major levels of structure. You look for the MACD to cross, but you don't really know exactly when you're buying and exactly when you're selling. When are you going to press the actual button to get inside of a trade? This is something that any successful strategy must possess. So with all that said, let's go ahead and dive into charts and I'll show you the entry that I have found to be the most profitable for me. So as I said, an entry reason by itself doesn't mean much without having other conditions. So in other words, any good entry starts with the conditions you look for beforehand. So let's talk a little bit about the conditions of the entry that you're going to be learning today. First off, we're going to be looking for what we call an uptrend. Now, an uptrend, put very simply, is just when prices are making new higher lows along with making new higher highs. Now, this strategy that I'm going to be teaching you today, I utilize it on all different time frames, and it's a strategy that makes use of multiple time frames. So for this example, we're going to be going from the daily to the 4-hour chart, meaning that our trend and structure analysis is going to happen on the daily chart. Then we're going to move down to the 4-hour to look for possible entries. I wanted to clear that up before we kept going. So this on the chart, our uptrend is the first thing we're going to be looking for. After we see this uptrend, we're going to wait for a pullback to the previous level of resistance that was broken. Now, this is not all we need to see. We also need all of this to be happening above the 50-period exponential moving average, so we can tell that we are in fact in an uptrend. Just makes it a little bit easier. And it's a great way to make this entry more rules-based. So as long as this is happening above the 50 EMA, then we have two of our conditions met. The next condition we're going to have is that this level of structure must have been tested at least twice. So we need 2 times that price has either been pushed down or pushed up from this level of structure. We need price to be in an uptrend above the 50 EMA, and we need to see a pullback to this level of structure that has been tested multiple times. Now, at this point, all the conditions are met, and the next thing we're going to talk about is the actual entry reason. And we're going to do that on a chart in just a second. First, I want to explain a bearish version of this to ensure that it's extremely clear. For a bearish version of this entry, nothing changes except we're going in the opposite direction. So in this case, we'd be looking for lower highs and also lower lows to form on price, giving us our downtrend. After we see that we have a downtrend, we're gonna be waiting for price to push back up to the previous level of support. We want all of this to be happening under the 50 EMA, and we want to ensure that this level has been tested at least twice in the past as a level of structure. In this case, we have 1, 2, 3 tests of this level. We have price under the 50 EMA, and we have a confirmed downtrend with a pullback to the previous level of structure support, giving us all the conditions we need in order to start looking for our actual entry reason. Let's go ahead and take a look at a full entry on a real chart. So in terms of conditions, what is the first thing we need to see? The first thing that we're looking for is an uptrend. We have this move here, this move down, this move back up, breaking into what? At this point, we're breaking into what we call new higher highs. We also have a higher low. So this is in fact meeting our rule for an uptrend. What's another condition we have before we look for the actual entry reason, which I'll go over in a second? We have to be above the 50 EMA. By the way, this blue line is my 50 EMA. This is happening above the 50 EMA, so that condition is met. The other condition is that this level must be a level that's been tested multiple times. Is that the case? We have one test here. We have a test here, here, here. So obviously this is a level that's been tested multiple times. So now that we have all the conditions met, this is when we can look for a rules-based way to enter the market. Remember, from the mistakes that I talked about earlier, it's important to have rules around the actual reason you hit the button. So that's what we're going to discuss right now. To be clear though, this is what I would look for beforehand. My preemptive analysis, which I will do with you a little later in the video when I show you some of the pairs I'm looking at for this exact strategy, but this would be my preemptive analysis. Would be looking for this exact situation. I would put this pair on my watch list and I would wait for a pullback into this zone, and that's when I would look for an actual entry reason. Luckily, we have market replay, so we don't have to look. We can just push price forward. So as we push price forward, we come into our zone. Now, as I said, this strategy, this entry utilizes 2 different time frames. We have the daily chart we just performed all of that analysis on. I personally am going to drop down to the 4-hour to look for an entry. Now, if you were looking at all your analysis, trend and structure on the 4-hour, then what I normally do is look for my entry on the 1-hour. If I'm looking at trend and structure on the 1-hour, I go down to the 15-minute chart for a possible entry, so on and so forth in terms of the different time frames that I utilize this strategy on. But now that we are in this zone, what do you think I'm going to do? I'm going to be dropping down to that 4-hour chart. Now, because I've utilized conditions that already give me a pretty good chance of success, my entry reason on these trades is very simple. I look for chart patterns in these zones on my lower time frame. What do I mean by that? In this specific case, I'm going to be looking for either a double bottom or a head and shoulders pattern. Those are the only two that I use for a bullish trade. And I guess it would be inverse head and shoulders, but you get the point. You get what I'm trying to say. Let's go ahead and push the market forward and see what we get. And I'll show you the exact reason I actually click